So our next topic that we're going to be going through is lessons Canada can apply from global payment systems concerning competition law and interchange rates. Our speaker for this is Mr. Les Riedl, who's the CEO of Speers and Associates, a global management consulting firm focused exclusively on the financial services and payments industry. For over 30 years, this organization has assisted a broad international client base across a wide range of countries, including Canada. Prior to joining SNA in 1999, Les had more than 20 years of experience in executive management and in retail banking and payments. Please help me welcome Les Riedl.
Thank you very much. I'm nursing a little bit of a cold, so if I lose my voice in the middle of this, I'll just continue with signing, I guess. Very happy to speak with you this morning on a topic that is very central to the work that we do. I know there are a lot of attorneys in the audience, and if you we're not attorneys, so if you're expecting a detailed technical conversation around regulations and rules, instead what you will get is a consultant's version. And the one thing difference between consultants and attorneys is we have lots of opinions and we don't charge for them. The title of the presentation is fairly ambitious in terms of lessons Canada apply from global payment systems concerning competition law and interchange rates. I had a shorter working title as I was putting the presentation together, which is Don't Do It. And I'll explain why as we go through. It's always good to get a different perspective in terms of what we're facing today here in Canada. And just to give you a little bit of background, we've been doing this for 32 years. Our focus has been exclusively on the payments industry and financial services industries. We've worked in virtually every major payments market in the world, helping create EFT networks, helping the various parties in the value chain get in and out of the various businesses, and working with the schemes in terms of what some of the strategies that they've developed for the businesses. So we're very familiar with the dynamics related to the evolution and development of the payment industry as we see it today. I'm in Canada 3-4 times a month. We've worked continually for the past 32 years with the various players in Canada. So we're very much in tune with some of the issues in terms of what you're seeing today. And I'd like to share some of that perspective with you. We then look at some of the global examples. And this is what I refer to as the what not to do section of the presentation. There isn't a single example of developments in payments regulations on a global basis where they've got it right. It's a continual process, and what you'll hear me referring to quite often is the traditional four-party system. I know you're all familiar with that, with the issuer, the issuing bank, the acquirer, and the merchant. And at the end of the day, it's a continual process in terms of the competition between those four parties and how that balance is maintained between the four parties in the payment system, and interchange and competition law being very integral components in terms of how those balances are maintained. Unintended consequences. As we look at the various examples, we'll talk about what the intention was in terms of some of the actions that were taken in the various markets, and what the result has been. And in most cases, it's not a pretty picture. And fairly strategic shifts have occurred as a result in some markets that have not necessarily benefited any members in the payments value chain. Finally, I'd like to tie it back to Canada again and talk about, given where we are today, and given the lessons that we can apply from global markets, what are some of the things that we should be thinking about, and what are some of the things that we should be concerned about? Looking at the Canadian market, and this isn't intended to be a history lesson, although I have enough gray hairs where I can actually remember the first ABM being deployed in the 1970s, and us thinking this was going to be the greatest invention that was going to revolutionize banking. was very clever working in retail banking at the time. We came up with complex formulas that for every teller transaction that was being displaced, it was an equivalent in terms of what that meant in the investment in the ABM. And to get an ABM installed at a branch, you had to identify the number of head count that you would reduce at the teller line. I'll keep that lesson in mind as we talk about new technologies, particularly as we talk to mobile banking. Because if you've been around the industry long enough, you'll see that every new technology development, where originally it was embraced as something that was going to revolutionize banking, at the end of the day, from a banking industry standpoint, collectively, we missed the point entirely in terms of not understanding the change in banking behavior that resulted and the incremental transactions that each new channel and each new technological innovation added. When you're thinking in terms of what mobile banking is going to do to you, or how that's going to be used by consumers and how that's going to be leveraged in terms of the payments value chain, think in terms of not what mobile payment in terms of the current construct, but think in terms of what mobile banking is going to represent in terms of new behaviors it's going to create, new transaction volumes, and potentially new revenue streams. Similarly, if you think back, it's been an amazing history in terms of payment cards. I mean, the first general purpose credit card traces its roots back to mid-1960s. And in the 1960s, you're either dropping out or you're dropping in, but more likely listening to the Beatles and using your first Bank AmeriCard. And the competing banks got together and formed MasterCard. You weren't actually revolving balances on credit cards until the mid-1980s. So we're dealing with a relatively new phenomenon here that has had, across on a global basis, significant growth. And frankly, if you look outside of North America, still has significant growth potential. That's fairly germane in terms of what you're looking at in terms of the four-party system and how the relative constituencies in that four-party system balance their needs depending on the stage of evolution and development of the payment system. Canada was extraordinarily fortunate. The banking consolidation that occurred in Canada occurred early on in the industry, which created some fairly strong constituencies in terms of the financial institutions and what they are able to do in terms of helping the evolution initially of debit as well as of credit. So you had the proprietary ATM networks back in the 1980s and early 1990s that evolved into shared ABM networks. And as opposed to the US, where in the 1980s in the US you had over 130 regional ATM networks, you went about it a little bit smarter and you put together Interac, which really catapulted the growth of debit both on the ABM side and extended that to the point of sale side as well. And that's a success story that I'll come back and refer to as we go forward. Toward 2000 is when the industry really began to kind of take shape and the structure began to form around that four-party system. And you had some interesting moves. To us, some moves that didn't necessarily make sense. We went through an entire process with clients in the 80s and 90s as they're looking at issuing and acquiring businesses, thinking of these businesses as being core or non-core. And no matter how hard we argued in terms of banks the size of Bank America, try to keep them in the issuing and the acquiring businesses, more often than not we lost the battle and the decisions were made that those businesses were non-essential or non-strategic. You had a similar kind of thought process going through with the Canadian financial institutions. We worked with several Canadian financial institutions that were reviewing the strategic fit of both the credit card issuing business as well as the merchant acquiring business. You had RBC and BMO that carved out those businesses, unlocked that value that was sitting inside the financial institution of the acquiring businesses, and created Moneris. And Moneris is a fair success story in terms of what it's accomplished in Canada. You had CIBC that took a different route with Global Payments and the Alliance. And the fact that you brought in an outside player and a US-based player certainly has an impact in terms of the voice of the acquirer in that four-party payment system. Chase Payment Tech essentially bought the Scotiabank portfolio, and Scotia at this point operates on an agent bank basis with Payment Tech, which takes it creates even more of an arm's length kind of distance between the financial institution and the acquiring side and the merchant business.